Good evening, everybody, and welcome to the trade update for March 18th, 2012. We can start out by taking a look at the chart of the clear leader here, the NASDAQ. As expected, we bounced our 20-day moving average, and we had a very, very strong bounce from that. As a matter of fact, we went all the way back up into our trend channel. Had there been a danger of the market reversing, it should have happened right up in here when we hit the back end of this trend line. The first sign of a breakdown would have been this reversing out and making a newer low here. Did not happen, and I didn't really expect it to happen. Like I said, I thought this 20-day moving average bounce would be a buying opportunity and the sellers would come in and explode the market higher, which they've done. And we're back up in this trend channel. You know, all the charts are saying that this thing is still bullish. Overbought, yes. However, whether it makes sense or not, you can't argue with the charts. And right now the charts are bullish. So I would expect to continue an up move here. If you take a look at the Dow, we had the same thing. It wasn't a 20-day moving average bounce, but we came back down into the bottom end of our resistance channel, which also lined up with our primary uptrend channel and very close to our 50-day moving average. Had a nice strong bounce there. Looks like we have a little ways to go before we hit the top of this channel, so I'm still bullish here. And the SPX, same type of thing. We came down to the bottom of our resistance, our old resistance channel, which is now a support area. We had the strong bounce right back up into our primary uptrend channel. So this is looking bullish as well, and I wouldn't be surprised to see this come all the way up into this area in the not long-term future. You know, yet even if we do break down under this channel again, it looks like it probably wants to go here. So if we take that information and we come down to the rut, this is poised to break higher. And it's very likely that we're going to see a continued up move into our resistance area of the Russell, right up in here. So when we take a look at this, everything still looks bullish. Even if we get a bit of a pullback earlier in the week, I would still expect the end of the week to be higher than it is now. Okay, let's take a look at our trades. We'll start with the April M3 position. This here, you know, in case you're wondering, the M3 trade, as well as the bearish butterfly, by the way, are both trades that are kind of built or designed around high volatility environment. So, you know, both these trades can take a very wide, fast price movement where a lot of other income trades get blown out. And you know, what's the market normally act like? Well, you know, it's our recent normal is some very wide price movements. Even through here, these are all very wide price movements. So this is the type of environment that this trade usually does fairly well in and performs better than most income trades. When we have the very flat market that we've been having lately, there are certainly better techniques you could have been using over the last 2 or 3 months. But the good part is these usually win in those environments as well. They just you can do things that perform better in those environments. You know, that said, with what we're speaking of the market, with this trade here, we have an adjustment point at 830, and I'm trying to see or wait out the market and see if it's going to break this 835 area, 830, 835 area, and continue up, or if it's going to break down and come down. So I'm thinking they're not going to stay here at 830. And I'm just trying to wait that out. I'll wait that out a few more days. If we don't get any kind of movement, we're going to end up rolling this 770 up to 790, possibly putting in some more delta hedge, because that will increase our delta. So we may end up possibly putting some more delta hedge in with some verticals here. Well, the best thing for us would be either a fairly aggressive pullback into range into here. Obviously, that would be the easiest thing to manage. The next best thing that could happen would be a fast shot up to 860, where we can basically, you know, just take this and roll this up into the 830 level and wait for the market to just have its blow off and then come back into range, which would be really nice for this trade. All right. So as we stand, everything looks fine. We're due for a roll-up, but we're going to wait it out a few more days, see which way the market goes. As far as the bearish butterfly goes, again, a trade for volatile markets. We get a lot of price swing. We have not gotten that. Therefore, we're only in 1/3 of a position here. The way that I have this plan to play out is this. Right now, we sit. Our delta theta ratio gets too high. We're going to roll this to 820. We get a pullback anywhere up over $1,000. I plan on taking it. With 1/3 of position, that's good. It's a 100% return on our invested capital. What would be a better thing to happen for us would be a very fast move to 860, in which case we could scale in, and if the market backs off at that point, we could end up with a very, very nice month here. However, our next add point here is 840. If we should go to 840, notice our delta theta ratio does exceed 1.5 to 1, which means what we would do prior to our next add point would be to take this 800, roll it to 820, and then add an 840 would be our next move with this. And that's going to go even if the market gaps up to 850 tomorrow morning or Monday morning. Even though it exceeds our add point, we know that it exceeded our delta theta ratio prior to hitting that. So in that case, we would roll this to 820 anyway and move to 840. So that's our next position if we have to do anything to the upside. Now, I have had some people trading this who have emailed me and stuff and a little bit frustrated because they can't get scaled in. That does happen with this trade, and there's absolutely nothing wrong with trading with 1/3 of a position. But I do have modifications for this for those of you who do mentoring with a bearish butterfly, where we break from the guidelines when we talk about modifying or adapting things to market conditions. It was very obvious coming into this month there was a high probability that we were going into this sideways trend, and knowing that, I have this bigger position on that I don't always cover, but it's a way that I modify this when I'm expecting very flat market conditions. So what I would do is I'd come in here, the market's at 826 on entry day. Our normal move is to buy these 800 butterflies and have a reference point of 800, and the people who own the bearish butterfly program will know what I'm talking about. So we have a reference point at 800, which makes our add point 840, and our second add point 860. But because I'm expecting flat market conditions, and those guidelines are more or less for normal or volatile market conditions, I'm going to adapt my plan a little bit. I'm going to come in here and I'm going to say, all right, I'm going to enter my 790 butterfly, but since I'm expecting flat market conditions and I want to be more on top of the trade and I want to get scaled in faster, what I'm going to do is I'm going to add my second third in right away at 820 shorts, and I'm going to take my reference point, and I'm not going to make it 800, but I'm going to roll it to 770. This means that my next add point here is when Russell is 830, and that's when I check it at the time of day I check it at. So when Russell's 830, that's my next add point, and what I'm going to do is I'm going to add here at 840, actually a little bit above the market. And this treats the trade as if I entered the trade when the market was at 770, when I really entered it at 880. From there, if the market continues up, I have a roll point at 840. Over 830, I add my 840 butterflies. Over 840, I roll my 800 butterflies to 860. That's the way the trade would go. And realistically, we put this on, and since the market basically did nothing except it had that little pullback that we had here, we had this little pullback here. Let's see, all the way that happened on like the 6th of March, 5th and 6th of March. Let's take a look at those days. Oh. Yeah, so you look at the 6th of March with the bottom, where it bottomed out. The trade looks like this, no problems. If we were using, this was our entry. If we were using our guidelines, there would be no adjustments or anything for this bottoming out here. Everything looks good. Trade looks really healthy. Then we have that strong bounce that we had following the moving average touch, which again really isn't a big deal. Let's see, do we hit 830? Yeah, I think we do actually hit 830. Hold on. Yeah, I know we do because I remember I added into this. I think it was Tuesday maybe. Yeah, not quite. So maybe Wednesday. All right, it's Wednesday. We've clearly exceeded our 830 point if you look at our charts here. Now, I wasn't too concerned with it hitting 830 back here when we first put the trade on. Not a big deal. I didn't necessarily want to jump into the position, but now that we've had our pullback, and if you remember, this was to a major support area, and we're getting our bounce, we hit 830 again. I definitely want to take that more seriously, and come in here and add our 840 butterfly in, and our new position is going to look like this. Now all we really need is for the market to sit for 4 or 5 days, and you'd be able to take profit target. However, the market did not do that. It just continued to come up Thursday and Friday. And end of day Friday, it kind of looks something like this here, where we were up about halfway to the profit target, and we're looking like this. Should we, continue to range here? It's not a problem. That's how this modification works very well. It's not really a problem to the downside either because we just scale back out of this thing. And up to the upside, you'd be okay for a fairly aggressive move because we have our reference point way back here at 770. We hit 840, we roll to 860. We hit 850. We hit it. Then we have to wait till 860 per guidelines, and we could roll to 880. And I think this trade could easily withstand a run to 880. And I really think the market's going to top out there. So this particular trade looks really, really nice. As does the regular trade, by the way. I mean, everything looks fine. This is just up money. It may make it faster because because the market's flat and we adapted to those market conditions. That is it for your market and trade update for this week. Stay tuned, and I'll keep you updated with any updates. Happy trading and make it a great week. Thanks. Good night.